Nice to meet you back, students. Greetings to all of you. Today we will start one problem on joint venture when separate accounts are maintained. So today we are going to begin the third question. So we have Amar, Akbar and Antony entered into a joint venture. Amar is to supervise the venture and to keep a separate set of books. He is entitled to 5% commission on sales. Akbar and Antony contributed 64,000 each. The goods were purchased from B and Co for 1,44,000 and from Amar's own source 48,000. Expenses amounted to 14,600 and all the goods were sold for 2,44,000. Prepare ledger accounts. Amar, Akbar and Antony entered into a joint venture. So there are three co-venturers, Amar, Akbar and Antony. Amar is to supervise the venture. That means Amar's responsibility is to take care of the business. So we can conclude Amar is an active partner. Akbar and Antony will be treated as a sleeping partner. And Amar's responsibility is to keep a separate set of books. So Amar will take care of the business. He is entitled to 5% commission on sales. Since Amar is an active partner, he is entitled for 5% commission on sales. And thus commission will come in two places. It will come in joint venture account and joint capital account. Akbar and Antony contributed 64,000 each. So clearly mentioned, capital is contributed by Akbar and Antony only. Amar does not contribute capital. Amar, instead of giving capital, he is taking care of the business. He is supervising the business. So Amar does not bring capital. Capital is brought only by Akbar and Antony. 64,000. So 64,000 will come in two places. Joint capital account and joint bank account. The goods were purchased from B and Co for 1,44,000. So 1,44,000 is called purchase. Purchase is an expense, so it comes in two places. What are the two places for the purchase? Number one, joint venture account and joint bank account. And from Amar's own source 48,000. So 48,000 is called Amar's own source. That means we have two purchase. One purchase is from B and Co. Another purchase is 48,000 from Amar. So cash purchase will come in joint venture account and joint bank account. Amar purchase will come in two places, joint venture account and joint bank account. Expenses amounted to 14,600. So 14,600 is an expense. So it will come in two places, joint venture account and joint bank account. And all the goods were sold for 2,44,000. So 2,44,000 is called sales. So sales will come in two places, joint venture account and joint bank account. Let us prepare the ledger accounts right now. So students, this is a joint venture account. So all expenses are recorded in the debit side and incomes are recorded in the credit side. So what are the incomes we have? We have only sales, 2,44,000, which is treated as sales. Debit side we have two purchase. Purchase is an expense. So we have first item Commission payable to Amar on sales, 2,44,000 into 5%. Commission is an expense, so comes in debit side. We have two purchase. One is called cash purchase, other is called credit purchase, Amar purchase. Cash purchase, Amar purchase, both is treated as an expense. So cash purchase comes in debit side, Amar purchase comes in debit side, both is treated as an expense. And then we have expenses paid 14,600. So all the four expenses are recorded in the debit side, debit all expenses and losses. Thereby you get a net profit of 25,200. Distribute 25,200 to all the three partners in profit sharing ratio. The profit sharing ratio is not given in the question, so we take it as equal ratio. Next we will go to joint capital account. So joint capital account, first you write by joint bank account, that's capital contributed by Akbar and Anthony. Amar being an active partner, he has not contributed any capital, so thus no capital for Amar, but Akbar and Anthony have contributed 64,000 each. Next, by joint venture, it's a commission payable to Amar, it's an income to Amar, credit all incomes and gains. By joint venture account, which comes in the credit side, it's called purchases by Amar. When Amar purchases, he is the payer of the income, payer of the purchase. So therefore, 48,000 Amar has paid the amount for purchase, which comes in credit side. Next, by joint venture distribution of profit among the partners. So 8,400, 8,400, 8,400 we distributed equally to all the three partners. And next, final settlement payable to Amar, Akbar, Anthony, 68,600, 72,400, 72,400. Now let us look at joint bank account. Receipts are recorded in the debit side, payments are recorded in the credit side. So what are the receipts? We have two receipts. One, capital contributed by the partners and sales made by Amar. So in case of sales, there is a receipt of cash. In case of capital, there is a contribution of capital by the partners, so it comes in debit side. So capital contributed by Akbar and Anthony comes in debit side, and capital contributed cash comes in, so it comes in the debit side, and 2,44,000 is a sales. Cash comes in. What are the payments we have? The first payment is by joint venture account 1,44,000, which is treated as purchase. By joint venture account 14,000 to 600 is treated as expense. So in both the cases there is a payment for purchase and payment for expense. And final answer of Amar, Akbar, Anthony, final settlement amount calculated in the previous slide, 68,600, 72,400, 72,400. Thereby the joint bank account tallies. Thank you.